Well, I think like today's data print was important, but we do want to see the next couple of CPI prints unfold. I mean, this one has so far been pretty benign, and it will feed into that risk case that the market is trying to trade, that the Fed will start to cut this year. Our own economics team have a slightly more hawkish view, where they do believe the tariffs will start to manifest with inflation, firmer CPI prints that will make it harder for the Fed to cut. But today's print is one for the bulls.
What are your clients doing these days when you have conversations with them? Are they buying risk here? Are they selling risk? What are they doing
I
here?
think people are trying to be thoughtful how to do it. You look in the rearview mirror and the market has had a massive rally.
Yep.
Valuations are back at nosebleed territory. But when we look at the marginal news flow, it's potentially more constructive. So it's more a question of less what are they doing, but how are they doing it? And using options is probably the answer to that.
Let's go to that. Using options, folks, is jargon for gaining a little leverage for protection and speculation on your underlying investments. What is the derivative dynamic right now of options?
Well, what we've seen is that the cost of options, implied volatility, particularly for the upside, has come in aggressively. So what that means is if you're looking at strategies like delta replacement, getting rid of your long equity and replacing it with call options, then that is something which is lining up as more attractive on our screens than it has done for a while.
Delta replacement is getting a United flight out of Atlanta. Okay, what in God's name is delta replacement?
So delta replacement and equity view is taking a delta view, a view on the equity market, and rather than expressing that by just being long stock or long futures, being long options in place of that.
To use less money, to expend less capital.
To potentially take less risk. If you're buying upside optionality,
are a lot of
options,
people doing that?
Risk.
Are they scared stiff out there where they're doing, Paul, delta replacement?
Sure, it's a new one.
I think what people are trying to do is to think carefully. If you are adding to a long position at all-time highs when the market has moved a massive way from those lows, that they're trying to do it in a way that offers a better risk reward than just purely adding risk.
Did your clients make that move from the U.S. markets to rest of world earlier this year, maybe even to the European markets in particular? Did you see that? And is that, if so, is that just a short-term trade, or is that a reallocation of money, do you think?
Yeah, I think it's a good question, and maybe it's a little bit of both. So there's a lot of different crosswinds. Is there a kind of resurgence in Europe, the fiscal picture there? But then you have trade and tariffs. But then you have the effect of the FX rate as well. So certainly coming into earnings season, as a short-term tactical view, that's a little bit more of a tailwind for the US than it is for Europe, just in terms of translation.